A lot of those are, very profitable from a mining perspective. Interesting spaces to get into, kind of low network hash rates. And so the profitability on those is really high. But folks want to be mining those, and then they want to actually be, stacking sats. And so what Catalyst allows you to do is to mine on those altcoin protocols. And then we really just price the compute power that you're submitting into our stratums in a different form of cryptocurrency. In this case, it's Bitcoin. So we're not actually doing conversions. We're really just pricing the compute power. So we're paying you directly in Bitcoin for what you're providing into our stratums.
Hi, everybody, and welcome to the Crypto Weekly podcast, the show where we interview the top movers and shakers in the crypto industry. Today, I'm joined with Alex Brammer, the VP of Business Development for Luxor Technologies. Alex, nice to have you.
Hey, good to have you. Thanks a lot, Mike.
Yeah. So today, we just wanted to talk a little bit more about mining. Luxor Technologies has some great products and services, both on the software side and the hardware side, to help anybody start mining if they'd like to. But Alex, why don't you, for the viewers that might not be as familiar, why don't you tell us a little bit about yourself, how you got into the crypto space, and then maybe talk a little bit about what Luxor does.
Yeah, absolutely. So I'm actually coming off a 15-year career in the military. Joined the Army when I was 18, and have been in the retirement process right now, kind of finishing that up. In 2017, came back from a deployment to Iraq and was in an Uber coming back from the airport. And the Uber driver was kind of messing around on his phone, and I was curious what he was doing, and not just for safety reasons, but just because I was curious. And he started telling me about Bitcoin, and I'd heard about Bitcoin in 2012. Interestingly, at that time, I couldn't even purchase it because of security clearance reasons. And this was kind of at the height of Silk Road and all that stuff. And so this kind of piqued my interest. He started talking to me about something called cloud mining. And so kind of went back, started doing some research. About 2 hours into diving down, what cloud mining is, realized that he was being scammed. And it ended up being that he was there was a cloud mining company out of Colorado. I forget the name of them, but they've, a couple of their guys have been indicted since. He was part of that. And so I literally messaged him on the Uber app, and was like, hey man, I don't know if you're going to get this or not, but please stop what you're doing. I have no idea how that ended up for him, but that kind of started me into investing in that bull cycle. Was still actively deploying and going on training operations in the Army at that point. And so didn't really have the bandwidth to fully dive down the rabbit hole. About a year and a half ago, kind of really at the turn of the COVID lockdowns, started looking into the space a lot deeper. Went through the research process that we all have to go through, kind of vectored back into Bitcoin, then kind of fully understood kind of on a philosophical and a technological level what Bitcoin mining was doing. I was very attracted to it in terms of it being the security spend for the network. That resonated with me and just kind of my background. And so, as I was looking for a place to land after I transitioned out of the Army, started looking hard at mining, and then discovered the Luxor mining team. Actually, just can't speak high enough about Luxor and kind of their flexibility and forward thinking. I basically discovered Luxor. They're based up here in Seattle. Their CEO, Nick Hansen, shot him a DM on Twitter and was basically like, hey man, taking a shot here. I hate cold calls as much as you do. Just coming out of the Army, we both used to race motocross. And so I was like, hey, from one motocross racer to another, love the space. Would love to just have a conversation about opportunities, drop my CV in his Twitter inbox. And a couple of weeks later, he hit me back, and that kind of kicked off a whirlwind of interviews and getting to know all the founders. And then I came on as their VP of Biz Dev shortly thereafter. And it's been, it's truly been an awesome experience so far, and just really couldn't be happier about where I landed.
That's an amazing story. And, first of all, thank you so much for your service. 15 years, very, very impressive, and appreciate everything you've done. That's a very interesting kind of, as you called it, a vector back into the crypto space. And I think everybody's got their own unique story, but it all starts with Bitcoin, and it all starts with truly understanding philosophically and economically why it's so important. So,
Yep.
that's amazing. But then, diving into Luxor a little bit, you were talking about scams on cloud computing, and I think Luxor is the polar opposite of that. You guys have the retail investor in mind always. You have different programs to help optimize the amount of profit sharing that people can get for their hash rate. So why don't we talk a little bit maybe about Catalyst first, and then we can talk about Equihash. But Catalyst is a great program, run by Luxor. So why don't you maybe tell us a little bit more about that?
Yeah, absolutely. So we support 10 different pools, 10 different proof of work altcoin pools. And so it's everything on Equihash, it's Decred, Komodo, Pirate, Zcash, a couple others. And so a lot of folks, especially a lot of those are, very profitable from a mining perspective, interesting spaces to get into, kind of low network hash rates. And so the profitability on those is really high, but folks want to be mining those, and then they want to actually be, stacking sats. And so what Catalyst allows you to do is to mine on those altcoin protocols. And then we really just price the compute power that you're submitting into our stratums in a different form of cryptocurrency. In this case, it's Bitcoin. So we're not actually doing conversions. We're really just pricing the compute power. So we're paying you directly in Bitcoin for what you're providing into our stratums. And so it's just an interesting way of, really building your Bitcoin position, but still being able to contribute to the security in the network hash rate of these other proof of work altcoins. So cool. It's a cool program. Very, very profitable. Particularly there was a point there in kind of March, April, May where Pirate was literally our most profitable pool. And so folks that were mining with us on Catalyst were stacking a lot of sats for a minimal amount of Pirate hash rate.
Yeah, and that's amazing. And I'm just starting my kind of foray into learning more about mining. I had an interview the other day with Son of a Tech, Matthew Hopkins. He runs a large YouTube channel, but he's also very heavily involved in mining. He said one of the problems with mining these altcoins is that, one, you have to figure out how you're going to acquire the coin, then you have to figure out how you're going to exchange the coin, where you're going to exchange it, then you're paying capital gains on both exchanges, and then you got to put it into whatever wallet you need. So this feels like it cuts out a lot of that those unnecessary steps in the middle, and it just really helps people get the most value for their hash rate. So I think that's incredible. The other thing that you guys have built is something equally as impressive, that allows you to mine the most profitable coins at any time.
Yeah, so this is either called best price execution or profit switching, or sometimes it's colloquially referred to as a machine gun pool. Really what this does is, if you have a specific algorithm, a miner that supports a specific algorithm, so if you've got an Equihash miner, you can be mining across the 4 separate Equihash coins, which, give me 1 second and I'll list those off for you. And so what this allows you to do, so if you're mining Zcash, Horizon, Pirate, Komodo individually, those are pretty profitable protocols to mine on by themselves. But the single miner that mines on those can support all 4 of those coins. And so what we do is we take the hash rate from that miner, and then we do a spot, basically spot analysis, second by second, which pool, based on network hash rate and the underlying commodities or the underlying spot price, what's the most profitable to mine at any given second. And we basically bounce your hash rate across those 4 different chains, generating what we call uplift. And so right now we're seeing about a 7% uplift above and beyond what you could be making on one of those chains by doing this machine gun switching or profit switching, across those protocols. What's exciting about this, so there's a lot of different ways that we can go with this. So we're generating, we're in the beta testing phase for the SHA-256 version of this. And so, we can hold the discussion on the philosophics behind Bitcoin Cash and Bitcoin SV, but you can still mine those chains. There's still a significant amount of network hash rate on those chains. And so you can bounce between those 3 once we release that. So we're pretty excited about this stuff. And again, just going back to your point about, our kind of business model was built around the retail miner, and with the retail miner in mind. And we're constantly trying to build products that is generating basically heightened levels of profit for folks that are in the retail mining space, and really everyone in the space. But these are interesting because if you're a retail miner, and to your point about Catalyst, if you want to talk about kind of implicit uplift and that avoidance of the capital gains, because we're not doing the conversion and we're not forcing you to do the conversion, you're avoiding that kind of 15 to 20% drag on your revenues that you would have if you had to kind of mine in one coin and then convert. And then the Equihash profit switching algorithm, soon to be the SHA-256 profit switching algorithm, generates that same type of uplift just by finding the most profitable chain.
Yeah, I think it's incredible. And, everybody these days is looking for some type of passive income, right? And something to help supplement their income. I think mining is a great thing to get involved in. The problem is a lot of people aren't that technical and, fear the mining space a little bit because they don't know how to set up their own machines, or they don't know how to, run a node themselves. But, you don't need to do any of that with Luxor. So, can you talk a little bit about how you just make it easy for anybody, any retail investor that wants to start mining to get involved?
Yeah, absolutely. I mean, this is where kind of our partners come in as well. So, if you have access to a rig, it's super easy to sign up. beta.luxor.tech for SHA-256, mining.luxor.tech for any of our altcoins. You go in, you create an account, you set up your workers, you basically configure your workers very, very easily with our Stratum address. And then the UI UX is extremely simple to use. And that's kind of on the pool side of the house. So like, you don't need any technical expertise to actually connect and configure your miners to the pool. And then we've got partners, shout out to our partners over at Compass Mining. Make it super, super easy to just, if you want to buy a single miner, you can contact the folks over there. Hey, look, I'd like to spend X amount. They'll give you a quote on a rig. Potentially that rig is already plugged in and hashing. And so it's not a cloud mining contract. It's not a virtual mining contract. You own the rig. You've got assurances and guarantees. You can VPN and see kind of the temperature, what it's actually hashing at. But you own that rig, you're hashing one, and you've got a passive source of income. You've got a way of kind of dollar cost averaging into your Bitcoin position, or your altcoin positions for that matter, in a way that you're achieving that allocation at a deep discount. And all of that doesn't require, I do this stuff with a couple of our partners. I do not have a tech background, at all. I was operational in the Army for 15 years, and I wasn't I was just kind of a grunt. And all this stuff is super easy for me as well. So that's one of the things we're really proud of. And I think that, we've built a reputation in the space, and we've built a kind of a Rolodex of co-location partners and rig brokers that allow us to provide solutions for anyone from a retail customer looking to allocate into one rig, all the way to some of the largest mining farms and co-location facilities in the world. So it's something we're really proud of.
Yeah, man, there you have it. Grunt proof. I also think that one of the best things about co-location is that you own the asset, you own the miner. So if at any time you wanted to exit the game, you then have that asset that you can resell.
Yeah,
sometimes at a profit.
Yeah.
Let's shift topic of conversation quickly, because topical, there's a lot going on in China with regards to hash rate. So for those who aren't necessarily as in touch with the space, China is placing some pretty heavy restrictions on mining, specifically mining that doesn't come from renewable energies. And so what's happening is a lot of that hash rate is moving out of China and into the rest of the world. So can I maybe ask Alex, what's your opinion on what's going on in China? Is that a good thing for Bitcoin in the long term? Does it have some drags with all that hash rate coming off of the network? And how do you see this playing out in the immediate future?
Yeah, so I think the temporality here is important. And I think kind of in the short to medium term, there are some challenges, right? We've got blocks coming in kind of 12, 13 minutes right now with the drop in hash rate. We've got a difficulty adjustment coming up, I think on Friday is estimated to be, and they're estimating it to be in the kind of 20 to 25% range. This is another example, kind of just if I can focus on the short term here for a second. it's another example of how resilient the Bitcoin network is, and the actual the blockchain itself. Like when we see the algorithm and the protocol operating as it should be with these drastic and kind of sharp drops in hash rate. We saw the same thing at the initial, there was a coal fire in, there's a coal explosion, some plants had to shut down. I want to say this was in Inner Mongolia back in kind of March, April timeframe, another kind of drastic drop in the hash rate. And really China has been doing us a huge favor and kind of giving us some resilience tests for the Bitcoin network. And so we're seeing it continue to operate the way that it needs to. Mining is about to become 25% more profitable on Friday with the the network hash rate and the difficulty adjustment. And so, in the short term, that's a little bit, I think more of the challenge right now is that it's contributing to this current FUD cycle that we're in. And kind of with the Elon tweets and then all the China stuff coming out and the regulatory concerns, it's understandable. But for folks who really understand the space, I mean, transitioning into the long term, this is very bullish for us, because really what it does is it just decentralizes the Bitcoin network further. It even further, like I would contend that a 51% attack, like when you talk through with people that understand the nuances of this, and you really like try and war game out what a 51% attack would look like, very, very difficult to execute. And so even when whatever 60, 65, 70% of the mining of the hash rate was physically located in China, and an even larger percentage of that pool-wise was located in China, even then it would have been difficult. Now, this just further contributes to the kind of counter narrative that Bitcoin is very secure and kind of resilient against 51% attack. Now, when it comes to kind of the North American Bitcoin mining space, this is incredibly bullish. It's bullish for a couple things. It's bullish for the miners themselves in the mining industry, because a lot of this network hash rate is both physically locating here in North America from an ASIC and a data center perspective. It's also virtually being located here in North America as well. We're seeing our network hash rate grow in our stratums at Luxor. I know the founder's experiencing the same thing. And so a lot of these pools, like with everything cracking down in China, the pools are experiencing, AMP pool, F2 pool, and are experiencing drastic drops in their hash rate. And so really that's bullish for our industry. I think the final thing that I would note about this is it's bullish for the acceleration of the transition to renewable energy, because with where we're at in the industry right now, and with where public markets are at, and with public sentiment, ESG narrative, and we're generally supportive of this. People aren't coming over here to the United States and looking to invest in coal-fired power plants. They're very, like, we have these conversations. Most of my day is spent kind of liaising between co-location facilities, power production facilities, and generation plants, and these larger Chinese miners. And the discussions are always kind of start with, hey, what's the source of power? What's your power generation method? And the conversation very rapidly stops if the answer is, hey, we're a coal-fired plant or something like that. Like, they're very, very intensely interested in, and because I think this makes sense, right? From the Chinese perspective, there's some scar tissue that they've already generated over the last few years. Like, this is not the first time that China has announced a ban on crypto and mining and all that stuff. It's the first time that we've seen it actually go into effect in a large scale, and we're seeing tens of thousands of rigs coming out of, or really kind of probably on the order of hundreds of thousands of rigs, multiple gigawatts of capacity coming out of China, and it's actually happening. I'm seeing pictures come across Telegram, almost daily of like, hey, this is actually happening. But they have some scar tissue, right? And so they're looking to kind of hedge the risk from a regulatory perspective. They're doing that a couple of ways. They're looking at interesting kind of a portfolio diversification strategy when it comes to jurisdiction. So if they're jurisdictionally diversified, meaning like 20 megawatts in this state, 20 megawatts in this state, crossing the border between Canada and the United States, if one jurisdiction shuts down, then their whole farm is not at threat. But they don't want to be involved in anything that could, in a few years or really a few months, be deemed either uninvestable or unsupportable from a regulatory position. And so they're really trying to get into the renewables. And so I think kind of the long and short of this is, there's some short-term chop here. In the long run, it's very healthy for the Bitcoin network itself from a decentralization perspective. It's very healthy for the North American mining landscape and our industry perspective, with companies growing and getting to seize this opportunity. It's very healthy for the transition to, the acceleration of the transition to the renewable energy space. I mean, Bitcoin being the kind of largest non-governmental subsidy of renewable energy, this is just accelerating that trend. And so, I mean, across the board, we are very, very excited about it.
Absolutely. I couldn't say it better myself. And, just to reiterate this Bitcoin energy consumption narrative, Bitcoin follows the path of least resistance. So it always looks for the lowest cost form of energy. And now that renewables have overtaken coal as like the cheapest form of energy, it's only a matter of time before all of that hash rate starts to go to, to flow to the path of least resistance and find the lowest cost. So absolutely couldn't say it better myself. Super bullish myself as well. So what has Luxor done in this kind of immediate time frame? Have you been trying to build out your mining locations or your hash rate due to the China shortage or the influx of hash power coming in from China?
Yeah, absolutely. I mean, this has been an amazing opportunity for us, for everyone in the space, really. I mean, from co-location facilities to kind of North American pools, it's all been great. We're working very closely with a lot of the larger Chinese miners to help them basically source power or source open rack space. And so a lot of these folks are fairly urgently trying to relocate their ASICs, because if you think about it from a revenue generation perspective, every day that they're down, they're losing hundreds of thousands of dollars, especially for some of these larger folks. And so we, through kind of our network in the space, have been helping to place these folks. And kind of our motivation for this is a couple fold. Our northern star, as Nick likes to put it, is kind of building hash rate under management, right? And so the more hash rate that we can get to flow through our stratums, the more interesting things that we can do with hash rate as a commodity. Kind of our longer term strategic vision here is to build out these hash rate derivatives that will allow for miners to properly hedge themselves to weather periods of volatility. And so in order to do that, we own a handful of miners ourselves that we host with a couple of our partners that allow us to do R&D. We're not too focused on the self-mining play right now, just because we've got enough on our plate building out the hash rate, the hash rate products and helping other mining farms to manage their own hash rate. But on a day-to-day basis, we're looking for interesting deals and availability in co-location facilities. For our Chinese partners, we're also looking for interesting power purchase agreements and power generation methods and availability. I'm getting as smart as I can, as quick as I can on different independent service operators and things like, curtailment, demand response, like all of these things, all of these interesting ways that we can enter the power generation and the power procurement space. And so that's kind of where we're focusing in facilitating this, and we're kind of rolling out the red carpet, honestly, for our Chinese partners. We don't think of this in adversarial terms. It very much is kind of about the Bitcoin network, right? And so the better we can treat them and the better deals that we can find them, the more sustainable business operations that they can build in North America, the less disruption there's going to be going forward. And so we're very focused on that. As a function of that, we build these relationships. We're likely to build the hash rate in our stratums, flowing through our stratums. And so I think it's kind of a win-win for everyone involved.
Amazing. A lot of great things coming down the pipe for Luxor, and I'm really excited to see where this all goes. If people want to get started with Luxor, or even if they just want to get in contact with you, how would they do so?
Yeah, absolutely. So I'm sure you'll drop this in the show notes. So our new SHA-256 platform is beta.luxor.tech. Mining.luxor.tech will take you to our pool that allows you to connect to all of our altcoins. You can find me on Luxor, just Alex Brammer, and on LinkedIn or on Twitter at Alex Brammer. And then on LinkedIn, same thing, easy to search for, and you can drop those in the show notes. Happy to talk any kind of opportunities in the mining space. I really am not in the business of turning down phone calls, because there's just too many interesting conversations to have. So whether you're a retail miner or or someone a little bit on the more institutional side, happy to have those conversations. And like I said, I'll get you some other links to drop in the show notes as well.
Beautiful. Well, it was great chatting with you, Alex. Thanks so much for telling us what's going on, and look forward to seeing what Luxor is up to next.
Awesome. Appreciate it, Mike. Thanks a lot.